Bitcoin, the world's leading cryptocurrency, experienced a sudden fall this week, causing a stir in a previously calm crypto market of this summer. Cryptocurrency enthusiasts have been observing a decrease in Bitcoin's notorious market volatility for some months now, with fluctuations in its rate hitting a low not seen since 2016. However, the peaceful scenario changed abruptly this past Thursday. Bitcoin witnessed over an 8% drop within just a few hours, hitting a two-month low late in the New York day. This nosedive quickly affected the wider crypto market, triggering a decline across all cryptocurrencies and resulting in over $1 billion in liquidations. This places Bitcoin in line for its toughest week since November and raises concerns about the stability of crypto exchanges, such as FTX. Several factors seem to be influencing the current downturn. Chief amongst them are the likelihood of extended high interest rates and the thin trading volumes in crypto, both of which amplify the negative impact on the market. Furthermore, crypto markets constantly face risks, such as unwelcoming regulators and an overall decline in risk assets. Even as Bitcoin has made remarkable progress since its lows last year, the wider participation necessary to maintain a bullish trend is missing. Many investors are currently reluctant to get involved, which hampers the market's growth and stability. Noel Acheson, a renowned crypto analyst and author of the "Crypto is Macro Now" newsletter, sums it up succinctly. Ongoing macro uncertainty is keeping investors at bay, she says, and with liquidity still lacking, there's not enough confidence to drive a sustained recovery. In a notable pattern developed in 2023, Bitcoin saw another major downtrend on Thursday. The cryptocurrency reached two similarly low levels earlier this year, in January and March. However, a pattern of resilience is noticeable, with each major drop followed by recovery, according to Stefan Olet from FRNT Financial. In the upcoming days, we'll have a clearer view if this drop will prolong, hinting a shift in this year's trend, stated Olet in an email sent on Friday. He highlighted potential indicators of a major drift in Bitcoin's price, including a significant and decisive plunge below $25,000 or, on the flip side, a sustained rise exceeding $30,000. Bitcoin's year high was $31,818, reported in July. One driving factor behind this week's plunge could be the market's increased vulnerability to larger trades. According to Riyadh Carey from Kaiko, a blockchain data firm, the past 4 months have experienced the least daily average volume of crypto transactions since October 2020. Back then, Bitcoin value was roughly $10,000 and Ether, currently valued at $1,670, was approximately $350. Crypto markets' reliance on narrative also plays a role in propping up the prices. Investor hype around the potential of the next big crypto project or Wall Street firms investing in cryptocurrencies is often significant. A report by the Wall Street Journal suggesting that Elon Musk's SpaceX had sold Bitcoin holdings appeared to intensify Thursday's downfall. The current crypto landscape is riddled with uncertainty, largely due to recent judicial and regulatory events in Washington causing tremors in the digital asset sphere. The aftermath of 2022's numerous bankruptcies and fraud scandals continues casting a shadow, suppressing the optimism surrounding cryptocurrency recovery. Notably, this week ended with Sam Bankman-Fried, the ex-co-founder of FTX and accused fraudster, being escorted to a Brooklyn prison. A judge rescinded his bail agreement, adding stress to the already volatile situation. Despite these legal predicaments, Bankman-Fried maintains his innocence against the multiple criminal charges leveled against him. The latest crypto price drops have been partially linked to U.S. law enforcement actions aimed at crypto exchanges, as highlighted by CoinShares' James Butterfill in a Friday blog post. He also cited a recent survey indicating that fund managers view regulatory decisions as their primary concern. As the shadow of impending lawsuits or penalties looms over, investors remain cautious about the security of the leading crypto platforms. Nevertheless, in the face of such concerns, Bitcoin has shown relative stability over the past few months, particularly when compared to global risk assets. Despite its post-crash scenario, Bitcoin remains strong, with a 58.1% increase so far in 2023. This progress surpasses the S&P 500's 13.6% gain significantly. Bitcoin could still face challenges if the monetary conditions continue to worsen. However, according to Bloomberg Intelligence's Jamie Douglas Coots, the buzz around a potential U.S. spot crypto ETF might help maintain Bitcoin's value. In June, BlackRock Inc. turned heads when they applied to launch a Bitcoin ETF, exchange-traded fund. Since then, several other companies have done the same, sparking a minor rally. Investors speculate that if these funds are accepted, they could provoke a wave of new buying in the crypto market. Ethereum, another major cryptocurrency, is also poised for its first ETF based on futures, as reported by Bloomberg. If approval comes through, it could trigger a market uplift, boosting Ethereum and potentially other cryptos, according to market expert Atchison. However, without any major event like an ETF launch, the crypto market may largely remain stagnant. Friday's large price swings within Bitcoin and other cryptocurrencies could be temporary until there are improvements in liquidity across digital and traditional markets. As we see central banks often maintain or increase high interest rates, traditional investment options like short-term U.S. Treasuries and other bonds are drawing the spotlight. These safer options are proving to be attractive to investors adopting a risk-averse approach in the current climate. Experts like Fadi Abu-Alfa, head of research at Copper Technologies Limited, suggest that global macroeconomic factors will continue to influence the crypto market. Interestingly, some optimists within the crypto sector believe it could gain from precarious situations like the ongoing real estate crisis in China. With government stimulus packages not providing enough relief for economic woes, Bitcoin's alternate financial system positioning could potentially benefit from any shocks triggered by these conditions. James Butterfill agrees that while a full-scale financial crisis is unlikely, if one did occur and impacted the broader financial sector, Bitcoin might receive a surprising boost. In simpler terms, negative impacts on the global economy could be harmful for cryptocurrencies as well. If the stock market experiences significant declines, cryptocurrencies are expected to take a hit too, because investors may opt to secure profits from wherever possible, and then prefer to stick with high-return cash until things stabilize, explains Atchison. He further adds, this period of volatility, however, is likely to resolve quicker in the cryptocurrency market than in the stock market, as investors adjust to the varying risk aspects of each asset category.